Dan Geltrude with us, Geltrude & Company founder, John Lonski, the Through the Cycle founder, much more. Dan, what is going on here? Technology is doing just fine, thank you.
Well, I think everybody knew that they were going to miss earnings. So was that really going to be a surprise to anybody? No. I think what we're seeing now in these stocks ballooning a bit is
I
that...
see what you did there.
Yeah, pretty good, right?
You can always count. No hot air from me.
I think what we're seeing now is, are those reports of all these jobs, Neil, is that bad news? No, it's not. Perhaps we're moving towards fixing supply chains, getting people back to work.
That's our soft landing.
Yeah,
so that's
exactly.
What Wall Street might be celebrating.
They may be. And I think if they're going, and on top of that, Neil, listen, big tech has been right-sizing for a while, right? They've been laying people off. Tighter companies, leaner, doing more with less. It's probably a good sign.
What do you think, John?
Well, I think when we want to take into consideration that this report had some good inflation news contained in it, and that is the jobs report show the average hourly wage is up by only 0.3% from the previous month.
Wage growth is clearly
slowed down at 4.4% from a year ago. Once we get that year-over-year increase for the average wage down to 3%, then I think we could take the nearness of 2% underlying rate of inflation seriously, and the Fed's job is finished. If anything, at that point, the Fed begins to cut rates. 10-year yield is up sharply today, but it's around 3.5%. 3.5% is well under the 10-year Treasury yield's peak of 4.25% back in late October. So not that bad. Yeah. And I think the market thinks that to a certain degree, this jobs gain is full of hot air.
Okay, you copied him on the hot air thing. All right. No, that was seriously, guys. Let me just get your take on how the markets are also perceiving the rate of increases, that this quarter point one is followed up by another quarter point one at the March meeting, and they still sit tight at the May meeting. Do you think that they sit tight at the May meeting?
Well, if you listen to what Jerome Powell said, and maybe these reports caught him off guard, and he didn't really expect that we were going to see these job numbers where they are. If you take what he said, we're not done yet. He gave every indication that they were going to continue to bring rates up. Now, is this going to make him stop and say, listen, let's pause, let's have a wait and see? Certainly,
but he's data dependent, but data like this kind of hangs in the air for a while, doesn't it?
Neil, just real quick, the problem is what happens if it changes? You know, he's got to stick with it. Exactly.
What do you think, John?
Yeah, I think that that 517,000 new jobs you had in January is a gross exaggeration of the health of the U.S. labor market. We've had company after company talk about planned layoffs. And moreover, let's not forget.
So let's not get ahead of ourselves.
No, yeah. You know, and equity analysts, they're looking for S&P 500 revenue growth of merely 2.6% in 2023. That's down from 10.5% in 2022. You got sales slowing like that. There's
so we got to just be one step at a time. Gentlemen, I want to thank